Today, we're diving into an incredible story about a subcontractor who just secured a contract worth millions. And it's from that client they've been courting forever. But they were faced with a critical challenge. Their cash was tied up in all their other projects. So how did they overcome this? How did they figure it out? You've courted that client forever, been trying to get in. You sent them bids, they've said no. You sent them some more bids, they said no. They've asked you to work up numbers for them, which you did, and you still didn't get the project. All of a sudden, they call you one day and they want to give you the job. They quickly mapped out their project cash flow for this new job, and they realized they were going to need upwards of 20 to 25% of the actual contract value in order to get this thing started and get it to the point where it's going to be cash flow positive. We mapped out those project cash flows for them. We showed them that they did need, in fact, actually 20% of the project cash flows. We showed them a way to reduce that to 15 by working with a couple different vendors that they had options on. You have $1 million job with $800,000 of cost. The job you think is going to take 6 months for you to work on. Okay, how is that $800,000 spent over those 6 months? Payroll, labor, equipment, etc. Knowing that provides you the ability to see what your cash flow is going to be and how much cash you actually need. Because they knew that information and they had it in advance, they were already working with potential lenders. Taking 5-10 minutes every single month and organizing those things, keeping them in one place, it was very easy and efficient for them to then grab those things and provide them to the lenders in whatever capacity they needed. Today, we're diving into an incredible story about a subcontractor who just secured a contract worth millions. And it's from that client they've been courting forever. But they were faced with a critical challenge. Their cash was tied up in all their other projects. So how did they overcome this? How did they figure it out? Stick around to find out how they optimized their cash flow, created some solutions, and were able to not only do those projects, but also not capitalize on taking that money back from their customers or ruining the relationship to try to see if they could get paid earlier. My name is 𝗵𝗆𝗶𝗺. I am the CEO and founder of Mobilization Funding, and this is the Construction MF'ers podcast. So let's get to the contractor story. It's the same as we always have heard. It's the same as you've always wished. You've courted that client forever. You've been trying to get in. You sent them bids. They've said no. You sent them some more bids. They said no. They've asked you to work up numbers for them, which you did, and you still didn't get the project. All of a sudden, they call you one day and they want to give you the job. The person you might have been competing with for years fell down, couldn't figure out the project, and here's your opportunity. Of course, you say yes, and so did they. They had a great backlog. They had an amazing WIP. Their accounts receivable far exceeded their accounts payable. They were right in line to capitalize. This project also, a little bit bigger for them. It was on the higher end. It was in the upper echelon of the range that they typically go on, but they've been courting this customer forever, and this is not the time to say no. They looked at their cash flow. Their lines of credit were maxed out because they had been growing already and doing great work. They had some cash in the business, but enough to do their normal business operations. They quickly mapped out their project cash flow for this new job, and they realized they were going to need upwards of 20 to 25% of the actual contract value in order to get this thing started and get it to the point where it's going to be cash flow positive. They quickly realized that if all of their customers would just pay them the money that they were due quickly and fast in advance of the actual time frame they were coming in, or just even on the terms that they were owed, they'd probably be able to make it work. But that was far too risky to put together for them. They realized that even one of those dollars slipped, not only were they going to hurt the project with the new customer they've been courting forever, but if they got behind on any of those jobs, or even one of those jobs got behind cash flow positive, and they were or kept behind their cash flow, and they were to pull all the cash out of that business to start the new one, to start the new project, it was going to be critically painful across all of the jobs, and they just couldn't risk that. So what did they do? They reached out. They found a project lender that was willing to work with them. It happened to be Mobilization Funding. We mapped out those project cash flows for them. We showed them that they did need, in fact, actually 20% of the project cash flows. We showed them a way to reduce that to 15 by working with a couple different vendors that they had options on. And so with 15% of the actual new project work they needed, we were able to build a project loan for them, not putting any pressure on the existing cash flow of their current business and operations. We were also able to help them use that money from the loan, coupled with the actual schedule they were going to get paid, and basically move that one big project with that new customer outside of their normal operational cash flow and finance it all on its own with the project loan and the project funds coming in. This was able to sustain their current business, keep their current customers happy, and actually build some efficiencies into the schedule for the new customer, making them happy, and those efficiencies actually were able to pay for the actual loan costs themselves. These are the kind of scenarios where good analysis and working up front and thinking diligently and proactively can help you manage a job and a project when you're trying to capitalize on these growth opportunities. So let's dive into the actual methods and means of how they were able to put these things together, both not just with us at Mobilization Funding, but I just mean in general and how they managed it. For example, how do you win new business with a new customer? What about putting all that effort in? How did it ultimately pay off? How are they in a great position to actually not only find solutions, see solutions available to them, but also execute on them? That's key too. Let's first start with assessing your cash flow needs. How did they go about doing that? All right, let's start with this. First, they kept great records of all their projects. How did they win new work? Because they executed their other work greatly. How did they win new work with this new customer and this new opportunity? Because they had a history of performance and a track record with all of their other customers that gave them not only the confidence to bid properly, but guess what? That new customer, they talked to the other customers too. They know that they were doing great work. They knew that they were finishing jobs and they had been watching that. So that's one of the reasons why they were given that opportunity. So assessing your cash flow needs is critical. They were using project cash flow tools. They had a project cash flow that they would use. What does that even mean? It's basically how is the expenses from the bid on your job going to be spent over whatever period of time that you are aligned to your schedule for the job you're going to try to complete. So let me say that again in an example. You have $1 million job with $800,000 of cost. The job you think is going to take 6 months for you to work on. Okay, how is that $800,000 spent over those 6 months? Payroll, labor, equipment, etc. Knowing that provides you the ability to see what your cash flow is going to be and how much cash you actually need. Because they knew that information and they had it in advance, they were already working with potential lenders, not only just their bank, factoring companies. We already knew who they were too at Mobilization Funding, and they also had some other options too in some of their private lenders, and they were also considering using their own personal equity from the owners. So they had all 4 options available to them, and they were able to do quick and good analysis. That cash flow and those financial reports were key. The other thing they did really well is they knew what it took for them to be able to execute and perform at the level in which they bid the job at. They knew where their labor needed to be. They knew their schedules. They knew when they had to start, when they had to finish. They knew when they had to get material on site. They knew what they could prefabricate. They knew all of the things that built the efficiencies for them to be able to execute to the level they bid it at. And they also knew what the costs were associated to building those schedules. Those key things made it very easy for them to make decisions on which type of cash availability they could use and preparing them for the right financing option. The third thing they did extremely well, they were very well prepared with their financial reports. They had organized where their tax returns are, where their corporate documents are. They analyzed where their current income statement, balance sheets are, their bank statements. They had all of their records in a clean, efficient place where they could easily transfer those to the lenders upon request. That method, it means, saved them a ton of time, because by taking 5-10 minutes every single month and organizing those things, keeping them in one place, it was very easy and efficient for them to then grab those things and provide them to the lenders in whatever capacity they needed. Couple that basic corporate documents with the cash flows of the project, and all of a sudden, it was very easy for lenders to be able to make offers to them on what they could do for them and how they can make it work. They could easily see whether or not they wanted to have a return using their own equity in cash, all or some. And they were also able to determine whether factoring options, material financing options, or the option that they ultimately went with in terms of Mobilization Funding and our loan, project-based loans, worked for them. Couple all those things together, they had proactive information and data that they could control, both on current projects and future ones. They had everything organized neatly, which gave them the most amount of options they could control for their lending options. And it also gave the lenders the ability to show them how they could best help them, or if they could even help them. And when they did bring them an offer, they could also show it to them exactly how it would benefit them the best possible way, giving them the control and power and flexibility to figure out how they wanted to execute the job and the new work. All right, in conclusion, I'm excited to share that story with you. And why did I pick today to share that one story? Well, I think it's a story everybody can relate to. What might be a story everyone can relate to, the methods and means and the outcome might not be something everyone can relate to. My goal today was to share a story that everyone experiences some point in business, myself included. You have massive growth, you have options, you've been working your butt off to get a new customer, you've been working hard to get the growth that you've been always trying to get. And then the opportunity comes, and are you well prepared for it? Sometimes you are, and sometimes you aren't. This is a story where they were prepared. They had thought about these things in advance. They had great education. They were listening to the people. They had good counsel, good advice, whether they were mentors, they found podcasts, they did all kinds of things, but they knew to have their financial documents in order. These are all the things that you can control no matter what size you are, no matter what the numbers look like. They had their income statements and their balance sheets in order. They had their bank statements in order. They had their corporate documents in order. They had their tax returns in order. They had built their project cash flows. They knew whether they were executing the work they needed to do already with their current customers to the way in which they bid the job. Meaning, if they bid the job to take 6 months and spend $800,000, did they spend $800,000 or did they spend $825 or $750? Did it happen in 6 months or 7 months or 6 months or 5 months? Were they able to gain efficiencies across the schedule? Did they build in things for their supplier? They knew this information. These are all things that you can control, data you can control. That gave them the maximum amount of options and flexibility when all of a sudden the painful moment came that they finally got that they've been working for. They had ways to fix it and mitigate it because they've already thought around that. I wanted the same thing for you guys. I hope this story helped you. I hope it resonates. Most importantly, I hope the solutions, the methods, and the ways that this contractor went about fixing them for themselves resonated with you and gives you the courage and the excitement to go about and make it happen for yourself. I hope you want to share your stories. Please put them in the comments. Follow us on LinkedIn as well. If not, please subscribe and share this story with anyone you think. God bless you and have a great week.